Hello and welcome to another Me RIT webinar. This virtual event series was created exclusively for RIT alumni through the RIT for Life commitment to your continuing professional and personal education. I'm Cindy Sobray, Executive Director of Marketing and your moderator for today's webinar. Before we start, let's take a brief moment to ensure that everyone is ready and familiar with the presentation tools. All participants in today's webinar have joined in mute mode and cannot be heard during the presentation. However, we absolutely encourage your participation. To submit your questions, please enter them in the chat box. The chat box can be opened by clicking on the chat icon located at the top right if you are a PC user, or the bottom right if you are a Mac user. If you are unable to locate the chat box, please follow the link provided on the slide for more information. We will make every effort to address all your comments and questions at the end of the presentation. If you are viewing the webinar in full screen mode, please note that you will have to return to the traditional screen view to access the chat box. Note that today's webinar will be recorded and made available, complete with captions, within a week following today's event. All participants will receive an email with the link to the recording. If you have any technical questions throughout today's webinar, please type those into the chat box, and our hosts will do our very best to get you the appropriate answers. And with that, let's get started. Today's webinar is titled Financial Aid and Scholarships, Planning for Your Child's Educational Expenses. Our presenter today is Troy Robinson, a 2012 alumnus of RIT and Associate Director of Financial Aid and Scholarships. With 14 years at RIT, Troy is committed to coaching students and their families on how to navigate through the financial aid maze so that they can make educated choices for pursuing their future career goals. In addition, Troy is an active member on committees at the university focused on student financial literacy, student homelessness, and study abroad programs. Previously, he worked for the Citibank Student Loan Corporation and was recognized with Customer Service Leadership Awards for his dedication to excellence. He also assisted clients by providing solutions for avoiding default on their federal student loans. And as mentioned previously, Troy is an alumnus of RIT and holds a master's degree in Human Resources Development. We are very grateful that Troy is with us today, and with that, let's get started. Troy, take it away.
Thanks, Cindy. I first want to take a moment just to thank you as well as the RIT Alumni Association for inviting me to participate in this webinar. I'm hoping that a lot of families, especially those families who have students who are planning to go to college within the next 2 or 3 years, will get a lot of information from this. The world of financial aid is very dynamic. Things are constantly changing. So even if you have younger children or younger people planning to go to college, you may still be able to gain some information from this webinar, but just note that things could change pretty quickly within the next 2 or 3 years. This presentation is something that I use on campus when I meet with families who have students in high school at the junior year level. So again, I think this is very relevant for anyone who's got someone college bound within the next 2 to 3 years. So what is financial aid? In our world, we try to break that up with different types of components that families would understand. The top two, scholarships and grants, this is what we call gift aid, and this is the money that families are really searching for. This is funding that does not have to be repaid. Scholarships is typically money that is awarded based on merit or skill. No FAFSA, and you'll hear that term quite often throughout this presentation, is required, and the FAFSA is the free application for federal student aid. That's the federal form. Grants are typically, in our world, money that, again, does not have to be repaid, but is generally based on showing some type of need for that funding, and there's going to be some different sources where you could find grant funding. And typically, for most colleges and universities, the FAFSA would be required to determine a student's need for grant funding. The next two items are what we call self-help. Now, a lot of families don't consider loans as financial aid, but it really is a source of assistance that can help bridge the gap between the free money as compared to the actual cost that a student is expected to pay to attend a specific school or college. Loans, there's a few different sources, and we'll discuss those. But primarily, there's the federal loan program or the direct loan program, and again, a FAFSA would be required in order to access those. And then there's student employment. This is where a student would work on campus and earn money. And for most families, this isn't money that's being put aside towards the tuition bill or even for room and board. Usually this is money that the student is earning through a paycheck. And most students are using this for travel expenses to and from home, maybe for books and supplies, their pizza money, buying a sweatshirt every once in a while from the campus bookstore. But it is a form of aid, and it can be included in a student's financial aid award letter. So what are the different sources for these types of financial aid? One of the top ones would be the federal government. The federal government is reviewing your FAFSA data and determining whether a student would qualify for federal Pell Grant funding, the federal direct loan program. Anyone who went to school maybe 15 to 20 years ago, that was referred to as the Stafford Loan Program, and again, federal work study. And then the nice thing about filing the FAFSA is that it should link you at the end of completing the FAFSA to your home state's educational agency. For New York State residents, that's going to be HESC, H-E-S-C, and you would want to complete the application to determine if the student qualifies for any state aid. In New York State, that's known as TAP, the Tuition Assistance Program. Other state agencies, for example, Pennsylvania has what's known as FIA, Pennsylvania Higher Education Assistance Agency. New Jersey has their own program, and it's TAG, Tuition Aid Grant. But one of the things you want to consider when looking at schools is if your student is considering attending a school outside of their home state, will the home state educational agency funding travel with the student? So for example, in New York State, if a New York State resident qualifies for TAP, but they choose to go to a school in California, New York State money won't travel with the student. So that's a source of aid that the student may lose out on based upon their educational choices. Some other states, like FIA, will allow a student to travel, but they will only let the money go with the student if the student is taking a program or degree program offered in another state that is not offered in the state of Pennsylvania. And those programs are becoming smaller and smaller. Most states are able to offer a similar program to a student within their home state. So you want to check the state for their rules and regulations as far as traveling outside with their funding, and the states will all have their own separate deadline application deadlines. So you want to make sure you're filing those on time as well. Colleges and universities offer their own merit scholarships and need-based grants, and again, merit scholarships will be reviewed or awarded based upon a student's academic criteria for simply being admitted into the school, and need-based grants typically are awarded based upon filing some type of document such as the FAFSA. And students should also consider looking for outside scholarships to bring to the school to help reduce the gap that the federal, state, and institutional aid does not cover. Some good sources for private scholarships, or a good way to search for private scholarships, is to actually go to college websites. So for example, if you go to rit.edu/financial aid, we've created our own search engine, and anyone has access to this. It's open to the public, and you can start searching for outside scholarships through there. Some other reputable sites are fastweb.com and finaid.org. That's FINAID.org. You never want to pay someone to do a scholarship search for you. Today, compared to years ago when a student would only be able to apply to whatever the guidance counselor handed to them, or maybe going to a library, the internet has really opened this up to students to find scholarships. Other ways to tackle scholarship searches are think of future employers that would want to hire your student after they graduate, and go to those employers' websites, and typically this will be in their HR department or section of their web page, and see if they offer any scholarships to students in particular fields. This doesn't necessarily mean that your student would ever work for that individual employer. They may just be offering scholarships to entice people into the field of interest. So it's something to look into. It's a good way to start looking for outside scholarships. Think of any civic groups, fraternal organizations, religious organizations that you or your student may be a member of. Consider contacting them to see if they offer outside scholarship funding. Also consider a student's employer if the student is working for a major company. For example, in Rochester, New York, we have a large grocery store chain known as Wegmans. They offer scholarships to their employees. Other major nationwide employers such as Target and Walmart offer scholarships. Fast food chains like McDonald's and Taco Bell. And these are typically employers that a student could be working for and may have access to some scholarship funding. So it's worth their time and energy to just check with their employer to see if they offer anything. Parents' employers, see if your human resources area offers scholarships for dependents for their employees. Think of local businesses in your area that may be offering one-time awards. So these are all ways to start searching for outside scholarship funding. And a student in their sophomore or junior year could start compiling this list so that when it's their time as a senior in high school, they already have a list as to who to apply to. So the basic financial aid formula takes the cost of attendance, which includes billable and non-billable expenses related to attending college, minus the family contribution. This is often referred to as EFC, expected family contribution, and that's the component that the FAFSA is calculating. So it's the cost of attendance minus the family contribution. This is the financial need that the student is showing. So in our world, the family contribution is going to be constant no matter what school the student is applying to, and you'll see that on the next slide. The cost of education is what is variable. And again, the FAFSA is the federal form that stands for Free Application for Federal Student Aid, and this is what's calculating the EFC, Expected Family Contribution. So, if the cost of attendance for a state school compared to a community college compared to a private college, as you can see, can vary greatly. But for the family who filed that FAFSA, and in this example, the expected family contribution is $10,000, you can see that the student is showing a different amount of need based upon the type of school that they're interested in applying to. So a student who is considering a state school, in this example, shows need of $15,000, and this is where the school will use all types of resources to fill in that gap, whether it's institutional aid, federal loans, state aid. Where in the community college column, you can see that the student isn't showing any need. That doesn't mean they can't be awarded a merit scholarship, but it would be highly unlikely that they would qualify for any need-based aid, because in this example, again, it shows that the student should be able to afford the cost associated because the expected family contribution number is the same as the cost to attend the community college. And then lastly, at a private school where it costs $50,000 to attend on an annual basis, here you can see that the student is showing greater need. And again, this is when the college will attempt to fill in that gap as much as possible with all the different resources available to the student at both the federal, state, and institutional level. Another thing to remember is you file the FAFSA annually. So the expected family contribution number can change from year to year based upon income and asset information that's being added to the FAFSA for each year. So just to give you an example as to what the cost of attendance was at RIT this past year, the top part of this slide, the total direct charges, is what we refer to as a billable cost. So tuition and fees for an undergraduate student this past year at RIT was $38,568. So that's for 2 semesters, full-time for fall and then full-time for spring. The full-time charges for dormitory living as well as a standard meal plan. Again, this is an annual amount of $12,274. Obviously, if a student elected to live at home or off campus, they wouldn't be charged room and board, so the cost of attendance could be slightly different for those students. So the billable charges this year was almost $51,000. Then the other components for cost of attendance include those non-billable charges, things that the school isn't billing the student for, but should be taken into consideration. Books and supplies, and transportation and some personal expenses. So for this past year, for an undergraduate student, RIT estimated those to be a total of $2,026. So what are the factors that go into the expected family contribution calculation? The biggest change for this 2017-2018 Fafsa Id year is something known as prior year income. What that means is, in previous years, including this current 2016-2017 FAFSA, families and students were using previous year's income, assets, and tax information. So for 2016-2017, families were looking at their 2015 information, the information from the previous year. Going forward, starting with the 2017-2018 FAFSA Id year, you're now going back 2 years. So for anyone who has a college student in school right now, and you filed a FAFSA for this past year, you used 2015 information, this is going to be true for 2017 and 2018. So for those families who have a student currently enrolled in school, it's going to seem like you're using the same data for these 2 years, and you really are using a lot of the same tax information and income information. So again, this is known as prior year. You're going back 2 years for tax and financial information. Other components of the FAFSA for the expected family contribution calculation is the value of parents' assets as well as the value of student assets based upon the time of filing the FAFSA, the number of household members at the time of filing the FAFSA, the number of household members excluding parents who are attending college at least half-time, and the age of the oldest parent at the time of filing the FAFSA. So there's some income protection allowances that are taken into consideration when determining how much of the parent's assets are being used in the calculation, and a lot of that's driven by the age of the oldest parent. Things that are not taken into consideration for the family contribution calculation is the value of the primary residence or home of the student. Any debt, including mortgages, car loans, other student loans, are not part of the calculation. Outstanding medical expenses or anything that you had to pay for health care is not asked on the FAFSA. And the value of the retirement accounts in a parent's name are not counted, but the contributions to an account can be counted. So for filing the FAFSA, in most cases, I would say almost 99% of families are now filing the FAFSA online. Another major change this year, besides the prior year calculation or information, is the fact that the FAFSA can now be filed earlier. Previous years, the earliest you could file the FAFSA for a student was on January 1st. This past year, that was opened up to be as early as October 1st. So for the 2017-2018 FAFSA, a lot of families will have already filed that document. But if you haven't, it's not too late. Just know that you can file as early as October 1st, starting this year and going forward, unless the government changes something. Also, a big change this past year was the fact that families could download their IRS information using a tool known as the Data Retrieval Tool, or DRT. So a hot breaking news item was that this past month, early March, that tool went down, and in a joint statement by both the IRS as well as the Department of Education, they explained that that went down due to security concerns. So they're now working on that, and we were hoping that this tool, because we find that a lot of families and students found the FAFSA much easier to fill out by using it or having access to it, would come back up in maybe 6 to 8 weeks. We just were notified this week by the Department of Education that it doesn't appear that this data retrieval tool will be available until the next FAFSA cycle, so it probably will not be available no earlier than next October 2017. So that's a shame. So anyone who hasn't filed the 2017-2018 FAFSA, you will need to input information off your tax forms manually. The FAFSA document is fairly easy to maneuver through. There's some logic built in that, depending on the type of way you answer a question, will determine what next question will come up that an individual will see. So you shouldn't be afraid to file the FAFSA. If you do have concerns, you can always contact a local college in your area. Here at RIT, we will assist families to filing the FAFSA. I know some high schools will have what are known as FAFSA nights, where they'll invite representatives from a local college to help families file FAFSAs, and that would be an opportunity to do that with a professional looking over your shoulder, so that if you did have any questions, and if you do have questions, don't be afraid to just reach out to a financial aid office, even RIT's financial aid office, if it's just a question that you may be hung up on, and then you can go back into the FAFSA and file that. Another change, this isn't as recent as the prior year, as well as the earlier filing date of October 1st, is the fact that the old PIN number system, and this changed approximately a couple of years ago, has been switched over to what's known as an Fsa Id. This uses more of a username password configuration. So if you've used a PIN number in the past and you haven't had to file a FAFSA recently, you, as the parent, as well as the student, will each need to create your own username and password. This is how individuals will electronically sign the FAFSA, confirming that the data that they've entered is true and accurate to the best of their knowledge. And anytime you make an update to a FAFSA, you will need to re-sign it, both the student and the parent. Also, if you have multiple students going to school at the same time, again, you file a separate FAFSA for each student. So the parent who is completing the FAFSA would use their same username and password, that Fsa Id, but each student would have their own individual sign-on information. If for some reason you've forgotten your Fsa Id at any point, or you've lost that, there are ways to have that ID set up again for you. One of the components to setting up the Fsa Id is setting up some memory questions so that it can prompt you to either create a new ID or recall the one that you did create already. Merit scholarships. So with merit scholarships, again, a lot of that funding will be sourced by the colleges and universities. And again, this is separate from need-based grants. Merit scholarships are not typically tied to any type of FAFSA document or any other document that shows that a student has any financial need. The amounts can vary from school to school. When you're shopping around and looking at different colleges and universities, you should ask what their selection criteria is to be awarded for a merit scholarship, what the application process is to be considered for a merit scholarship. And a main question that you really should take some time and make sure that you and your student understand is, if the student is awarded a merit scholarship, what are the renewal terms and conditions to have that scholarship continue through the life or career that the student's at school? So for example, here at RIT, the majority of our merit scholarships have a 2.8 cumulative GPA requirement. And that's going to be reviewed at the end of spring term of each year. If the cumulative GPA happens to fall below 2.8, here at RIT, our policy is to reduce the scholarship by the annual amount of $500. Then when we go back to review the student in the next year, again at the end of spring term, if the student is back up to a 2.8 cumulative GPA, we reinstate the full amount of the scholarship for the following year. If the student is still below a cumulative GPA of a 2.8, then we don't reduce it again by a $500 reduction. So there's kind of a safety net with our scholarship renewal policy. As an example, if a student was offered a $10,000 scholarship and they never had that 2.8 cumulative GPA, then you know that the student scholarship would be at $9,500 for the life of their time here at RIT. Other questions to ask when considering merit scholarship awards: is this award renewable if the student falls below full-time? Schools may have some criteria that a student must meet full-time enrollment status to receive a scholarship. Is the scholarship tied to a major or degree program, meaning if a student comes to a school maybe in a business field or degree program, but then they get to the school and decide that they want to become some type of art major, will they continue to be able to receive that scholarship? Also ask if for some reason the student takes a little bit longer to graduate, maybe for some reason they had to take a term off due to illness or injury, or maybe they studied abroad and that pushed out their expected date of graduation due to the number of credits they could earn. Will they continue to receive that scholarship based upon being in school longer than anticipated? Other college financing options. So once you've received your financial aid award letters, you're checking to see what it costs to go to that particular school. You're trying to understand what's still outstanding. You've already talked to the school and you now know that there's still an outstanding bill that's going to be due that isn't being covered by any type of need-based aid or merit-based aid. How do you fill in the gaps? For a lot of families, they're going to turn to the Federal Direct Loan Program. This is a federal program like the Student Federal Direct Loan. Biggest difference is that a parent will need to submit a separate application. The interest rates are determined in July of each year and are tied to the Treasury bill rate. This past year, the interest rate was around 6.4%. And the parent loan is only in one parent's name. So you can switch which parent applies for it from year to year, because just like filing the FAFSA, you would file a new PLUS application based upon how much funding you need from year to year. So it's an annual application. And the one thing I should say is however you finance a student's first year doesn't mean that's how you have to finance future years. Maybe in the first year or two you're very comfortable with using the Parent Plus loan product, but in future years you may switch over and choose to use some other type of lending product or other source of funding to pay the college bill. There are some protections with the Direct Plus loan. One, first of all, there's no prepayment penalties on any federal student loan or parent loan program. So if you want to take out the Parent Plus loan, you can choose to defer payment while the student's in school. Interest would accrue, so you could choose just to pay the interest, or you could let it all ride and start making payments after the student falls below either half-time or graduate. And one of the protections is the parent who's the parent's name that the loan is in, if that parent should happen to become permanently disabled or passes, it never becomes the other parent's responsibility to repay the loan, nor does it ever switch to the student's name to repay the loan. So there are some forgiveness programs due to disability and death. You can check to see if the school offers payment plans. Here at RIT, maybe you could afford to pay the tuition bill, just not all up front. So you could have that set up over a 3-month or 4-month repayment plan within the term. You would just want to ask the school whether there's any fees assessed to that type of plan and how that plan works. For some families, they can afford to maybe pay 2, 3, or 4 years worth of tuition up front. And a lot of schools offer what's known as a tuition prepayment plan. The benefit to that is if you can afford to do this, typically you'll get a discount on the overall tuition rate because you're locking that rate in at the time that the student first attends school, so it avoids any type of tuition increase. And for a lot of schools, on average, you should anticipate maybe a tuition increase of about 4 to 5% on an annual basis. So there's some savings for families who can do that. Here at RIT, a lot of our degree programs require what's known as cooperative education. It's kind of like an internship, but instead of paying tuition for it, the student is working for an employer out in the real world. They're gaining some valuable experience. And a lot of times these are employers that the student will turn to apply for their first job. The nice thing about the cooperative education programs is the student is earning money while participating on this. So we understand that students who may be in a cooperative program across the country or even in a different part of the world, they may need to set aside some of those earnings for their living expenses. But we're also very well aware of students who can set aside some of those earnings to help pay for a future term here at RIT. So it's just a way to maybe plan for future years, and it's a conversation you'd want to have with your student to see if they understand if that's feasible. Can they set some of that money aside to maybe lower the amount that has to be paid out of the pocket, or maybe reduce the amount that they have to borrow? We would hope that incoming freshmen, as well as any student throughout their career, is working during the summer and possibly during their academic school year and using some of that funding to help pay for incidentals, like I've mentioned, books, supplies, maybe travel costs to and from home during breaks. I mentioned the private scholarship searches. Again, I can't emphasize this enough, especially for a student who's maybe a sophomore or junior in high school, to start those searches early so they already have compiled a list of places to submit applications, or sometimes it requires essays, whatever the foundation or organization is looking for. For 529 plans, these are college savings plans. They're investment products to save towards a child's college education. And a lot of times families would want to start this much earlier than 2 years from when the student's going to start school. The distributions from these plans can be used towards tuition fees, books, supplies, room and board. And currently, investments in 529 plans are usually exempt from federal, state, and local taxes. If you were to cancel the account and to receive a refund, you would have to pay federal income taxes on the earnings. Plus, there could be a 10% tax penalty on canceling the plan and getting a refund. 529 plans owned by a grandparent or a non-custodial parent are not reported as an asset on a student's FAFSA. However, the distributions from these 529 plans can be considered untaxed income in the student's name on future years' FAFSAs. And again, because we're looking at FAFSAs that look at a prior year situation, sometimes that's not going to, that won't impact a student for a couple of years. 529 plans that are in the name of a student as the owner or beneficiary are treated as assets of the parent on the FAFSA, and those distributions do not count as income on future FAFSAs. Because they count as parents' assets, those are pretty well protected compared to the assets of a student, because in the federal calculation, the government's going to assume that the student can put more of their assets towards their education because they have a longer time before they get to retirement. Other things to take into consideration are tax credits and deductions. And education and credit helps with the cost of higher education by reducing the amount of tax owed on your tax return. If the credit reduces your tax to less than 0, you may actually get a refund. And the two primary educational credits available are the American Opportunity Tax Credit and the Lifetime Learning Credit. And I would suggest that you reach out to the IRS website or a tax advisor on more information about those two types of credits. You may also be able to deduct qualified educational expenses paid during the year for yourself or for a spouse or a dependent student. The tuition and fee deductions can reduce the amount of your income subject to tax by up to $4,000. And there's a special deduction allowed for paying interest on a student loan used for higher education, and the student loan interest is interest that you or the student paid during the year on a qualified student loan. This deduction can reduce the amount of your income subject to tax by up to $2,500. And again, I'm going to recommend that you contact a certified tax advisor or the IRS for more information. I myself am not a tax advisor, but you can certainly reach out to the IRS for more information. And lastly, private federal student loans. So some families will elect not to use the parent loan program, and that's a personal choice. There are certainly a lot of private lenders out there who want your business. You can go to a search engine like Google and just type in private loans, private student loans, or sometimes they're referred to as alternative student loans. And there may be private lenders who can beat the federal parent plus loan rate, offer something lower, or maybe they can offer you a discount on the rate initially. You definitely want to shop around, make sure you're asking whether those rates are variable. Can you lock in a rate? What happens if the student was to become permanently disabled? It's my understanding, I'm not aware of any lender out there that will discharge or forgive the loan based upon the parent or the student passing or becoming permanently disabled. And in most cases, a private lender is going to require that the student act as the primary borrower, and then someone will need to be a co-signer on the loan because most undergrad students just simply don't have the income or the credit history to be approved for a private loan on their own. And it doesn't have to be a parent that acts as a co-signer. I've seen where a grandparent will step in that role. I've seen friends and neighbors for students do that. But just remember, if a student is in repayment on a private student loan, if they become late on their payments or stop paying altogether, the co-signer is still on the hook, and it could impact the co-signer's credit history detrimentally if the student was to stop making payments or were late on payments. So the basic steps for a student is to apply for admission to the colleges of their choice. Here at RIT, we don't review any FAFSA data until a student's been admitted. So even if a student lists RIT on the FAFSA, we don't pull that information until the student's been admitted into a program. And that's true for a student coming in from high school or a student transferring into RIT from another school. We just don't review FAFSA data until that student's been admitted. Make sure that both the parent and the student have applied for their FSA ID so that they can sign their FAFSA. File the FAFSA on time and online. Now, here at RIT, we're pretty relaxed. We allow families to file the FAFSA even throughout the school year if the student's attending. But some schools may set institutional deadlines and require that you file the FAFSA by a certain date, because maybe they only have a certain amount of need-based aid that they can allocate to students. So they're going to award that to the students who file the FAFSA the soonest. One of the things you will receive upon filing the FAFSA is a student aid report, and this is sent to the student via their email. And this is basically a printout of all the data that you've included on the FAFSA. And this is your opportunity to make sure you've not made any mistakes. Did you add a zero under your income, or did you misplace a decimal point? Because if you've done that, that could seriously change the expected family contribution number, And you definitely want to give the schools the most accurate EFC, expected family contribution number, because that's what's driving whether a student qualifies for need-based aid. So if you've made a mistake, you can go back into the FAFSA, make a correction, and again, you're signing that for the student as well as yourself. So lastly, you want to make sure you're filing any additional forms. Now, at RIT, we do not use a form known as the CSS profile through College Board, but a lot of private institutions do require that additional document, and it may require a student to report income and asset information from a non-custodial parent. This is especially true and can be tricky in divorce situations. Again, you want to make sure that you're working with a school and submitting all forms that they're requesting, and they may have separate scholarship application forms that need to be turned in as well for their merit-based aid. Again, when you're searching for outside aid, only use free and reputable web-based searches. Your guidance counselor could be a wealth of information for local scholarships as well. Never pay for scholarship searches. There's just no reason for it in this day and age. Keep photocopies of all documents that you submit to the schools, as well as to any outside scholarship agencies and foundations. You may be able to use some of that information again when you stumble across a new scholarship source. When you get the financial aid award letter, and even after reviewing what you think you can afford, there may be special circumstances you want the school to be made aware of. Again, when we went over the slide as to how the EFC is calculated, I mentioned things like medical expenses, things like the damage to a home due to a storm that you weren't anticipating having to pay out of pocket. These are all things that you may want to explain to the school so that the school can take that into consideration and see if there's any additional sources of aid that they can offer to the student because of these special circumstances. Worst case scenario, you reach out to the school and the school says, unfortunately, we don't have anything else to offer your student based upon what you're telling us. Best case scenario, maybe it took you 30 to 40 minutes to draft an email and the school is able to offer additional funding. So that would be the hopeful outcome that everyone's looking for. And again, meet all deadlines that the Institute is promoting. I mentioned our office website, and again, you can go here. There's a lot of information about student loans, the parent loan program. We do a nice job doing a comparison of parent loan versus alternative loans. It goes into more detail about our institutional scholarships, as well as you can look for outside scholarships through our website. Now the next link is for New York State residents, hesc.newyork.gov. This is where a student could search for state scholarships as well as looking at the TAP application. And again, you should be able to link to TAP through filing the Fafsa or whatever your home state agency's link is. For even more information about the student aid program process, you can go to the federal website, studentaid.ed.gov. You can see historical information about student loan interest rates, aggregate limits, annual loan limits. Again, just a wealth of knowledge and information there for you. And then lastly, again, to file the FAFSA online, it's fafsa.gov. So I think that's the bulk of the information I have for you today, and I think if there's time for questions, we can do that.
We have time, and thank you, Troy. There are a fair number of questions that have come in, but I encourage anyone else to type their questions into the chat box, please, and we'll get your answers as soon as we can. So, Troy, a couple of things. I'm just going to read this verbatim. So if the FAFSA produces a number for, quote unquote, total aid available, what is that exactly?
So the FAFSA doesn't calculate a number of total aid available. The FAFSA is calculating the total number that the Department of Education believes that the family can afford to pay out of pocket. So again, in the example on the slide where the expected family contribution is $10,000, $10,000 is what the Department of Ed thinks the family should be able to pay without even borrowing for it. Now, a lot of families will disagree with that, but that's the standard number that all schools are using for that individual family. So it's up to the school to try to meet the gap that the EFC isn't covering through the use of scholarships, grants, if a student qualifies for need-based aid, to the federal government, state government, as well as any outside sources. So again, the EFC doesn't tell us a number as to what aid the student, we should award the student. It's telling us how much the family should be able to afford for the student.
Okay, thank you. That question was for Philip. The next question comes from Marina. What is income level asset value of the household at which financial aid will not be granted?
That's a pretty common question. The problem is it depends on more than just the income. It depends on number of people in the household. Obviously, a larger household, the income amount could be higher and still qualified for need-based aid. It also depends on number of college students, not including parents who may be in school, that can impact that number. Also assets. So I don't have a number as far as income goes for a family where the amount of aid would dry up. Regardless of how much how much income a family is showing, minimally a student would qualify for a federal student loan. And if they're not showing any need, the type of student loan that they would qualify for is known as unsubsidized, meaning the interest would accrue while the student's in school. Then it's the family's choice whether the student accepts that loan or not. But no, there's no income magic number that I can tell you, don't bother filing the FAFSA, you're not going to qualify for aid, because it's going to be dependent on more than income as those factors determine the EFC.
Curtis has a question. I'm going to read it verbatim. How does the student get additional student loans over the $5,500?
Yep, so he is correct. For a first-year student, the maximum for a FAFSA filer is $5,500. And the most that out of that $5,500 can be subsidized is $3,500. And subsidized is when the government's picking up the interest while the student's in school and during the 6-month grace period after they leave school. The only way that a student can qualify for some additional federal loan funding above the $5,500 in their first year is if a parent is declined for a federal Parent Plus loan. The student would then qualify for an additional $4,000 in unsubsidized loan funding in their name. Or if the parent didn't go through the Plus loan route, we here at RIT will allow proof that the parent acted as a student's co-signer on a private loan. And if they were declined for the private loan and it can provide us proof of that, we will treat it like a Plus loan denial and allow the student to receive an additional $4,000 in their first year in unsubsidized student loan funding. Some other ways is students who have some pretty extreme situations, and these are situations where the student can self-identify on the FAFSA that they're homeless, that they were a foster child. There's questions on the FAFSA that will determine a student's dependency status. And if a student can answer yes to one of those, they're considered to be independent, and that would open up the amount of federal loan funding that a student would qualify for. But in the majority of cases, students are considered dependent, regardless if a parent files, claims the student on their taxes or not, regardless if a student receives any financial support from the parent. We still need to have parent information on the FAFSA, and that will determine dependency status, which drives the loan limit.
All right, so you answered a question earlier for Philip on the FAFSA, so we're going back. Philip has a clarifying question. So is the FAFSA just the standardized way schools can then judge how much they can help?
It is a standardized form because, again, that expected family contribution number is going to be the same from school to school to school, and then it's up to the school using the appropriate sources. So, for example, that EFC number drives the dollar amount for the Pell Grant. So if a student qualifies for a $4,500 Pell Grant, it doesn't matter what school that student goes to, that's the amount of the Pell Grant because that's a federal grant program and that's the most that student qualifies for. What fluctuates is the amount of funding that the institute itself will provide a student, and that's going to be based upon whether the student qualifies for merit. And again, merit is not based on need, and in most cases the FAFSA is not required to be filed for merit-based review, and whether the student qualifies for any institutional need-based aid. So again, the Institute is always trying to fill in the gap that the federal and state programs don't cover, but again, most schools have limited budgets and allocations. So in most cases, a student won't be fully funded, and that's where a parent or a family has to decide, are we going to make up the difference with parent loan funding, private student loan funding, trying to find those outside scholarships to help fill in the difference.
All right, thank you. Question from Kathy, does it make sense to use a home equity loan over a federal parent loan? Would there be some advantage to doing this? Using
home equity, whether it's a loan or line of credit, is fairly common. And again, it's kind of like the private student loans in the sense that you may be able to find a home equity loan rate that's lower than the Parent Plus loan initially. It's all based upon comfort level. How comfortable are you having another mortgage on your house to pay for educational expenses? There may be some tax benefits for using a home equity loan. Again, I'm not a tax advisor. You certainly want to seek out counsel on that. And also with the Parent Plus loan, as I've mentioned, that loan never transfers to anyone else if that parent passes or becomes permanently disabled. I'm not sure what that would mean on a home equity loan. The home equity loan may require a co-signer. It is, again, one way that a family can pay for educational costs. It's not in our basket of advice. Just like a parent could choose to borrow against a retirement fund, against an IRA or an employer retirement plan. We don't necessarily agree with that format or way of funding a student's education, but again, it's all personal choice and the value of the family making that determination.
Okay. Steve has a question regarding something that might apply to most folks. So if he's got a high school freshman and a sixth grader, and he wants to start financial planning for his kid's college education, are there tools available that would help him to understand what type of financial aid they might get, knowing that things can change year over year?
So I would suggest going to studentaid.ed.gov. That's the Department of Ed's website, and that'll give you a good breakdown as to what federal aid is available. Then again, consider contacting your state education agency by going to their website to see what they offer to students, both in need-based aid and merit-based aid. And a great website, and maybe for future webinars I'll include it as a link, is finaid.org, and that's FINAID.org. That is a very reputable website with a ton of information. You can do searches, you can ask questions. It has student loan calculators, interest rate calculators. It's just a great website to go to and start poking around, especially if you have students who are still in elementary school and you just want to self-educate yourself on what's happened in the past and what could happen in the future.
Thank you. Eric's question has to do with family income. If that increases significantly year over year, will merit typically be affected?
Merit should not be affected. Now, again, you would want to ask the schools that you're looking at. I can only speak about RIT, but in most cases, merit aid is not affected by any type of income increase or loss. It is truly, in most cases, awarded to students at time of admission. And in most cases, FAFSA does not need to be required because it's strictly looking at probably SAT and ACT test scores, class rankings, the competitiveness of the high school that the student went to. The amount of the merit award could also be determined based upon the competitiveness of the programs that the student's interested in at the college. But no, increases to income should have no impact to merit, but you should always ask the school that question.
Okay, good advice. John has a question specific to RIT. Can merit awards be increased or decreased after the first year of college?
Great question, and again, it should be a question that parents and students ask all colleges. Here at RIT, the merit awards are based upon the information that the high school student provided to be admitted. So no, we don't increase our merit awards, but there are opportunities once a student is at RIT to apply for additional funding, and I'll mention two major sources. There's one known as the Nathaniel Rochester Society Scholarship, or NRS, and you could go to RIT's website and search for NRS Society or Nathaniel Rochester Scholarship. They make the determination as to what students will be awarded the scholarship, and it would be additional funding that could be used for future terms. I believe in most cases it's after a student has completed their first year and a half at RIT, which would be the earliest that they'd be qualified to apply for. And I think it has a GPA requirement of either a 3.0 or 3.2. But again, that information can be found easily at RIT's website. Another source of scholarship funding that can be awarded to a student after they're here is through what's known as our Leadership Institute. So this is a source of funding for students who participate or who are active on campus in leadership roles, whether it's a club or student government. They could submit an application through that organization to see if they qualify. Also a source of income, or I should say a source of assistance, is if a student becomes an RA, a resident advisor. It's not merit-based, but they would have to apply for it. And typically, a residential advisor would qualify to have their room and board covered if they're elected. So that's the source of funding to help pay for future costs.
Thank you. I think you sort of answered this, but I imagine Curtis has a question specific to grades required. I would imagine they vary depending on the scholarship available.
Exactly. So grades are going to drive the merit award, whether a student is awarded a merit-based scholarship or the amount of the merit-based scholarship based on that school's criteria. For example, and I'm just using different school names, Clarkson University may have a very different way of awarding their merit-based scholarships compared to RIT, and they may have different renewal processes as well as dollar amounts. So it will be driven by the individual colleges or universities.
Here's another question specific to, I'm having a hard time reading it because I have to scroll and my scroll bar is not working great. Kathy wants to know, is that it there?
Yes.
Okay. If I get a tuition discount because of my employer, Rochester Regional Health, would my daughter be eligible for further merit scholarships?
So you're lucky. I'm very, very familiar with the Rochester Regional Health tuition discount. I work very closely with that program. And you can reach out to your HR department with Rochester Regional Health because they should have the same information. The maximum award or tuition discount, so typically I should back up. Rochester Regional Health offers what is known as a 30% tuition discount. If the student's already been awarded institutional aid, both need-based and scholarship funding from RIT, the combination of the 30% tuition discount as well as the institutional aid cannot total more than 50% of the tuition. So if the student's merit awards or need-based aid, when combined with the 30% tuition discount, is less than 50%, then there's no change to the student's award. If the combination of those two are 50% or higher, then yes, we would have to reduce our merit or need-based institutional aid because, again, the policy is set at 50%, and Rochester Regional Health has that information as well.
Great. One last confirmation type question. You said that you could file your FAFSA as early as October 1st, correct?
That's right.
But is that in the student's senior year in high school to go to school the next academic year, or is it junior year? When does the parent and students file?
Sure. So the financial aid calendar now starts in October of the student's senior year in high school.
All right. So it is now too late because we're in April.
Not for RIT. Now, for some other institutions, they'll say you can certainly still file the FAFSA, and we will award you any federal aid that you qualify for, but you've already lost out on institutional aid. But here at RIT, we don't really have a strong deadline for filing the FAFSA.
All right, one last question. Mike just sent it in. What were the 2 tax credits you possibly file on your taxes?
Yep, so the 2 educational credits are the Lifetime Learning Credit and the American Opportunity Tax Credit. And then there are ways for you to reduce the amount of your income based on qualified educational expenses. You could deduct up to $4,000, as well as if a student is paying any student loans back, they can potentially deduct up to $2,500 based on the interest that they've paid on those student loans in an annual basis.
Great. Mike, I hope that helps. All right, we are vastly approaching out of time. If there are any additional questions, I'm sure Troy would be happy to get me some answers so I can get them to you. Please email them to ritalum@rit.edu. I promise you we do answer them, and we'll get you those answers as soon as we can. Again, we shared that we will get you the email out in the next week or so with a link to this recording. I want to thank Troy for being here. I realize this is a complicated subject, and he's our resident expert, and he did a great job. So thank you, Troy, for doing this. And then lastly, please join us for our next webinar, if I could change the slide and talk at the same time. On April 19th, the benefits of traveling long-term for recent grads as well as seasoned professionals. This is being presented by alumni Lisa and Lucas Barber. So it is 1 o'clock on the dot. Thanks again to all of you for joining. You can exit by closing your WebEx window. And please let us know what you thought of today's webinar by taking the very brief survey that will pop up when you exit. Thanks again and have a great day.